if you meet an endowment in US and say, hey, I'm raising money, would you like to invest? So they said, okay, so are you a VC? You sound like a VC, you look like a VC, you're talking like a VC. Are you a VC? No, 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 I'm not a VC. I actually don't do only technology companies, I do physical companies, I do it in India. My companies don't fail as much as it happens in Silicon Valley. So, okay, so what are you? You're a private equity guy? You're a private equity? No, 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 I'm not private equity. So then said, so who are you? And then
Yeah.
I'm not able to answer that question.
Yeah.
So some of us, on the behest of Rockefeller, gathered in a place called Bellagio in Rockefeller. It's a
Okay.
Rockefeller Center in Bellagio, normally used for discussing esoteric issues. So this was one esoteric issue. Some
Okay.
of us gathered, and one of the big topic at that gathering was what to call ourselves. So who are we and what to call ourselves?
Right.
And there was a lot of voting that went into social capital, social venture capital, micro capital, venture analyst, venture catalyst, and all kind of names. Impact investing sounded very impactful.
Right.
So, and that's how we actually came up with the impact investing term.
Hey everyone, this is Prashant and I'll be your host of the VC10X podcast. And today we have Vineet Rai with us. Vineet Rai is a co founder and chairman of Avishkar. The Aavishkaar Group is focused on developing the impact ecosystem in Asia and Africa and manages assets in excess of $1 billion across equity and credit, with over 6,000 plus employees across India, Indonesia, Bangladesh, and Kenya. In this episode, we talk about the story of how Vineet and his wife started Avishkar back in 2001. How was impact investing founded and Avishkar's key role in it? Avishkar being the only Indian fund that is a case study in Stanford Business School with not one but three case studies done at Avishkar. How is impact investing different from mainstream VC investing? Relevance of impact investing in developed and developing countries. Helping Bangladesh government seed the local investing landscape with a fund of funds model. How founders struggle with martyr syndrome, and so much more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Vineet, so good to have you on the VC10X podcast. How are you doing?
I'm good, Prashant. Thank you for having me.
Yeah, it's a pleasure having you on. And I read about the humble beginnings of Avishkar, which is an organization that's now managing over $1 billion, but was started with a mere 1,000 rupees with your wife. So tell us about that story of how Avishkar started.
So, Prashant, I think most of us have humble beginnings. Uh, I'm a forester by training, and I never thought to be a financier, to leave to be a venture capitalist. I was in a forest, got married. My wife didn't like the forest. I needed to come out. I went to IIM Ahmedabad. Then I got an opportunity to set up probably India's first incubator. I cannot give you in writing it was India's first incubator, but whatever I can remember, it probably was India's first incubator for government of Gujarat, and we were reasonably successful. And then I came to know about the idea of innovations. I met a lot of people, and what I realized was that for the biggest missing piece amongst the ideas and innovation was capital. There was zero risk capital available in India in 97, 98. More so if you wanted to go into rural India or real India, let me put it this. So therefore, there was a virtual India which was emerging, and there was some money available for it. Very inconsequential, but there was some money available. And then there was a real India for which there was no money available. And again, when I say money, there was debt available. The SIDBs, the NABARD existed, but there was no risk capital available. And I thought, and see, generally I was 29-year-old, and I thought I was the smartest guy around. And when you are 29 and you are naive, then it looks like you can do things that others cannot. So I just quit my job. I personally had 5,000 rupees saved, and I started the fund with that money. But I was very clear that you cannot actually just start the fund and be successful. So you need to build the ecosystem. And forestry taught me one word: ecosystem. So I thought ecosystem is important. And ecosystem, generally people have different connotations, but as you know, ecosystem means trees. Forest is not about trees. So trees, shrubs, herbs, birds, mammals, everything includes that. So ecosystem means government, stakeholder, physical infrastructure. Now I can't do anything about physical infrastructure, but talent, human resource, connections. So I wanted to create intellectual capital also. So I wanted to create venture capital and intellectual capital. And intellectual capital was the name of the company that I started with, for which I needed 1 lakh, which I borrowed from my wife. So 5,000 was my capital. 1 lakh is what I borrowed. Roughly translated at that time, exchange rate $2,100. And that was all with which we started. 2001 October, Avishkar
Okay.
as a fund started. 2002 March, Intellicap started.
Right. So your wife is the majority stakeholder here, right?
My wife was the 50% shareholder in Intellicap.
Okay.
At that point of time, she did not hold anything in Avishkar because
Right.
it was a trust. So really, I had never thought about an AMC or asset management. In
Right.
fact, I did not even know that you need an AMC. So
Right.
there was no connection between the two. I was just, I thought the fund will run on its own. I later on learned all this.
Okay, and let's also talk about the evolution from that point where you started and you were still figuring things out, and how that evolved into what Avishkar is today, right? That journey.
So, as I said, what we were trying to do was use capital to unleash the entrepreneurial instincts of people to solve big problems. Now, if you go and look at carefully at all entrepreneurs who have been successful, they were not trying to be rich. They were trying to solve a big problem. So, somebody was trying to solve a dating problem. Facebook came from there, or somebody was trying to make a better car, or somebody was trying to make a better engine, or somebody was trying to make a better software, Microsoft or Google for that matter. Yeah, I don't think so Google started because people wanted to be rich. They wanted to actually put all the information on the internet together. So, and how to do it in a very quick manner, that's how it started. So all companies actually start where people are solving a very large problem. Of course, technology plays a role. What I was looking at when Avishkar started was, can we find those entrepreneurs who are trying to solve real world problems? And by providing them capital, can we unleash their entrepreneurial thought process? I was a very for profit guy. I wanted to actually do everything for profit. But, and I was quite convinced that venture capital, it worked in Silicon Valley, and I knew this was virtual world, it was not real world, and things happened at a astronomical pace. You have a J curve, you actually have a hockey stick and whatnot. But I said, even physical world in a country like India, physical things can also actually scale and become large. They may be slower, maybe. And so, what Avishkar did was look at the world from the view of 1 out of 10 not succeeding. We were looking at 7 out of 10 succeeding. We were willing to take all execution risks, and we wanted to invest in entrepreneurs who were solving real problems, creating jobs, livelihoods, or reducing risk and vulnerabilities in the life of people coming from the lower strata. Now, if our assumption was if we can do a lot of that, we can make India a more equitable country than what it was. And so the ideas, thought process was noble, but we were very commercial in our thinking. So I also wanted to make money. I also wanted to return the money back, etc., etc.
Absolutely. So that's maybe the modern term of that is impact investing. That the focus is to do good, and investing is a part of it. But also, you're also wanting to make profits and give returns to investors, right?
So, Prashant, impact investing is actually a term that did not come in because it's a modern term. It came in because we
Yeah,
struggled to
exactly.
raise money. So, most of us, so I was actually, so in that sense, we are probably one of the first impact investor because we predate the time by 6, 7, 8 years.
Exactly.
Now, in 2001, when I was actually from the forest trying to find my ways out, I was not the only one trying to find this out. There was a lady called Jacqueline Novogratz in US. She was also struggling to find an answer to this problem. And then there was a gentleman called Ronnie Cohen in UK who was also trying to do this. And there may be more people. I'm just telling you the name of three of us. All of us started at the same time in 2001. So, in three different parts of the world, and none of us knew each other. So, we had no context or play. We also came from very different. I came from the forest. Jacqueline came from Rockefeller. She comes from a very distinguished family, and she wanted to use philanthropy to unleash entrepreneurial talent. So she said, "You give us the money, we will actually invest in these and make changes." I was saying, "You give me the money, I'll return your money, but how much I will return, I don't know, but I'll return your money." And I think Ronnie was saying, "You give me the money, and I'll give you reasonably good returns, and I'll still try to change the remoter part of United Kingdoms." Jacqueline and Vineet both were concentrating. I was concentrating only on India. Jacqueline was concentrating in India, Pakistan, and Kenya, but based out of US. So very different backgrounds, etc. As time passed, 2005-6, because I was trying to be a very commercial guy, I was trying and raising money. And the more people I met, the more I realized that the professional investors have what you call buckets, and those buckets is how they allocate. So if you meet an endowment in US and say, "Hey, I'm raising money, would you like to invest?" So they said, "Okay, so are you a VC? You sound like a VC, you look like a VC, you're talking like a VC. Are you a VC?" "No, no, no, I'm not a VC. I actually don't do only technology companies, I do physical companies, I do it in India. My companies don't fail as much as it happens in Silicon Valley." So, "Okay, so what are you? You're a private equity guy? You're a private equity?" "No, no, no, I'm not private equity." So then said, "So who are you?" And then
Yeah.
I'm not able to answer that question.
Yeah.
So some of us, on the behest of Rockefeller, gathered in a place called Bellagio in Rockefeller. It's a Rockefeller
Okay.
Center in Bellagio, normally used for discussing esoteric issues. So this was one esoteric issue. Some
Okay.
of us gathered, and one of the big topic at that gathering was what to call ourselves. Who are we and what to call ourselves?
Right.
And there was a lot of voting that went into social capital, venture capital, social venture capital, micro capital, venture analyst, venture catalyst, and all kind of names. Impact investing sounded very impactful.
Right.
So, and that's how we actually came up with the impact investing term.
That's very interesting to learn, and thanks for sharing that story. So you were actually there when this
Yeah,
term
because
impact investing was
because we
coined.
came up with the term. So of course, see,
Oh,
nothing will happen without us because we were the first ones. So
right.
see, the
Awesome.
unfortunate reality of the world is that Indians don't write their story,
Right. Right.
while the Western world actually document everything. But I was not that stupid, so I have been documenting all my life. So there are enough and more this thing. We are also the only Indian fund which is a case study in Stanford Business School. So, and
Amazing.
there are not one,
Amazing.
there are three case studies on us. So everything that you are discussing is part what is taught in Stanford Business School as well. And through Stanford, the case study is now actually quite popular across the group. So
Yeah.
a lot of Indian institutions also buy the Stanford case study and teach it.
Okay. So you can directly give it to Indian institutions, right? Can't you?
No, 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 no. They have to buy it. Indian institutions have to work hard to actually take our case study. They'll have to come spend time. Stanford
Exactly.
sent two students for
Okay.
3 months to work on the case study. That's an expensive proposition.
Exactly, exactly.
And then a professor, a full-fledged professor, actually worked on it for 1 year to get
Right.
the story out, and it is one of the best written case studies. And they've not done one; they've done three case studies on this.
That's awesome. So we have one of the pioneers of impact investing right here over
Well,
there.
we created impact investing. India is the country that created impact investing. We
Awesome.
are the global lab of impact investing, and the world cannot claim any credit to impact investing without India having its name. So,
Awesome. Awesome. I love that. And now, since you have so much focus on impact investing, you were there when the term was coined. You have designed this entire concept, or designed the concept first and then named it, right? So, how do you think this impact investing has evolved over the years? And now, can you go to LPs and pitch that, okay, we are impact investors, and they get, okay, this is what they are actually doing, and that's the bucket that you're putting yourself in, right?
so Prashant, let me actually give you some statistics. So, we also set up an institution called Global Impact Investor Network. Then I set up another institution in India called Impact Investor Council. All this was set up. We were all founders of all this. If you go to Global Impact Investor Network on their website and Google or search Vineet Avishkar, the website was launched with an interview of ours. So it just goes. The first article on that is my interview on impact investing. So this is as wide as 2009. Gin was just created. Its website was launched with our interview. So that'll tell you how
Yeah,
intimately involved the whole history of impact investing with Avishkar has been.
absolutely.
So, impact investing today, roughly by Jin's calculation, is $1.3 trillion. So, it's not small, it's $1.3 trillion. We are small, impact investing is not. Now,
Right.
part of the reason is because impact investing as a concept has been very deeply accepted by all the allocators of capital. So if you go to any American pension fund, etc., it is still something new to India in terms of the Indian fund managers, but globally it is actually a fairly accepted concept. All pension funds, etc., have allocations. Those allocations right now stand in 1.3 trillion odd dollars. So it has gone a long distance. So today, if you go, there are enough and more allocations available on impact investing, and that number is only going to increase from where it is. If you ask me as a purist impact investor, is the definition the right definition? Let me put it this way: that the definition, every time you expand the definition, you start seeing all kinds of people co-opted in it. So what is the definition of impact investing today? It talks about, do you have an intent to make impact, and do you actually report your impact? These are the two questions that are asked. Now, intent is defined by you actually adding a suffix to your name. So let's say I am Avishkar. So Avishkar impact, or Avishkar itself is synonymous with impact, so nobody questions us. But mainstream funds just put impact behind their name and they become impact funds. So it's as easy to show intent as by putting impact behind you. Of course, then you have to report your impact. And then you can report your impact in many different ways. Now, it is very difficult in the world of investing to not invest and deliver no impact. So you will deliver some impact, maybe positive, negative, but there will be impact. Uh, Invariably, any business that you create, other than maybe making guns or drugs or alcohol or war, or mining, something which are reasonably negative, most of the businesses will create some level of positive impact. So it is difficult to actually look at a distinction between investing and impact investing today. That's one
Right.
big challenge that has emerged. So how is it that Unilever not delivering impact? Of course, Unilever
Exactly.
deliver impact. So then
Yes.
why is impact investing not investing? That's actually a big question. Of course, the answer is
Exactly.
very simple. If you do not do your investment because you are trying to deliver impact, then you are not impact investing. That's basically what it means. But how do you know post facto that I started with the intent of impact or did I not? For example, if you start a telecom industry, you deliver more impact than Avishkar will ever deliver because telecom has
Right.
massively transformed the way poor people connect with and has created a very equitable. So, therefore, impact is an outcome, and there will be intentional impact and there is unintentional impact. And
Right.
unintentional impact sometimes will outweigh the intentional impact. The reason
Right.
why intentional impact is important is because you don't want to leave anybody behind. So the masses will follow a certain approach. Now, impact investing by nature actually asks you to. So, therefore, if I have to compare between investing and impact investing, in a country like India, the line is very blurred. Because today, if you look at Avishkar and then you look at a mainstream fund, any large mainstream global fund, we are actually investing into the same companies. And that actually tells you, now, of course, it is possible that I may be investing in similar kind of companies and they may do one off. So the mainstream is very conveniently moving into impact investing. But impact investing cannot go to mainstream. That's the only distinction. Having
Exactly.
said that, I genuinely believe there is a place and a role for impact investing, and it will get sharper and sharper as time passes.
Absolutely. We are still figuring out the line, or the line keeps moving.
Yeah, no, Prashant, the line will keep moving for many reasons, including people. Poverty is a very dynamic concept.
Right.
So, for example, technology is a very dynamic concept. Science is a
Right.
very dynamic concept.
Right.
So, science also keeps proving itself wrong. Similarly, impact investing has to keep evolving for it to keep delivering impact along with returns.
Absolutely. And when we talk about impact investing, are the developing economies in focus here, or is it also relevant for developed economies?
So, Prashant, the world is very dynamic. I mean, just some time back, Europe was a rich continent. UK was a very rich country. The sun never used to set. UK is right now behind many others
Right.
developing countries. So, India is considered a
Yeah.
developing country. China is considered a developing country.
Right.
Most of these developing countries are far beyond. Maybe the per capita income is one way to look at it, but the
Right.
moment you bring in per capita income, but the moment you bring things together, our economies have become larger. So because everything is dynamic and there is a hierarchy of people and people are always left behind, I think impact investing is as relevant to US, Europe, and other rich countries as it is relevant to poor countries and developing countries.
Absolutely. And Avishkar has its focus mostly in the South Asian region, right? Mostly. So, talk about how you are seeing impact investing and the sectors that are involved in this evolving in these regions, and the countries that are there in Southeast Asia.
So, see, we started by looking at India and then extended ourselves to Bangladesh, Indonesia, Sri Lanka, and East Africa. We are actually a reasonable size player in East Africa as well, with increasing focus on Africa going forward. Now, when we started off, we were actually looking at financial services. So we were quite big in microfinance, then affordable housing, microfinance, financial inclusion, fintech, all kinds of companies that were playing a role. And then we also looked at artisanal investments, so companies like Fab India, Jaipur, and many others, then dairy, agriculture, agri-techs, so Agrostar, Argos, and circular economy, and now carbon related. So we are interested in green hydrogen, carbon credits. So a whole host of things that people, education, health, of course, because of the generic impact that they deliver as well. So a whole host of companies. Generally, if a product is being produced by poor people, consumed by poor people, or actually helping poor people to deal with their risk, it will fall into our place. So insurance, financial inclusion, uh, anything that actually helps either create jobs or reduce risk and vulnerabilities. So all the sectors are found in. When we talk about South Asia, Southeast Asia, of course, India is the pioneer. So we have to understand that India does very differently than how South Asia, Southeast Asia do. Now, when the moment we actually start talking about other countries, we need to take into account three, four things. India is a subcontinent. It's actually quite large. It has a large population, high density of population. But more interestingly, India's ecosystem evolved very differently from how the other ecosystems are evolving. For example, whether it is an Axel or a Sequoia and an Avishkar, they can work together in India. It will never happen that I will work that easily in Indonesia or in Bangladesh with these companies. So that means there is actually a real ecosystem that operates in India. The mainstream ecosystem is actually working hand in hand with the impact ecosystem. But when I go to an Indonesia or when I go to Bangladesh or when I go to Sri Lanka, the mainstream ecosystem is very radically different and reasonably nascent. So the challenge of doing impact investing in those countries is of a different magnitude. And this is heightened further if you go into Africa. In Africa, impact investing has to compete with philanthropy because very large philanthropy is also dealing with it. And then it has to deal with absolutely commercial investors. And there is while the philanthropic guys are literally competing with you on investing because they are giving donations and you are essentially giving commercial capital. The commercial capital guys are looking at very large companies, so they don't want to come down. So in reality, the role of an impact investor in Africa and even in Southeast Asia is far more challenging than what it is in today's India. Let me put it this way.
Absolutely. I love that insight on how different markets are operating differently, are at maybe different levels of development in terms of how mature the ecosystem is. Like India has an ecosystem of venture capital, the mainstream ecosystem, and it can very well be supported by the impact ecosystem as well. But when we talk about Bangladesh and Africa, their mainstream ecosystem isn't that strong yet. So then, do you guys have to play a much bigger role there? Is the onus more on you to build that ecosystem? Is that what the challenge is about, or is it something else?
Yeah, no, Prashant. So I think the challenges are twofold when you go there. So, for example, in Bangladesh, we actually seeded Bangladesh Angel Network. Now, it's actually on the largest angel network today in Bangladesh. Uh, we have actually been talking to the government. We are actually gave government the example of a fund of fund idea, the Bangladesh government from India, and said that see, India has actually seeded multiple funds using a fund of fund concept. Why don't you consider this? And Bangladesh government, to our surprise, actually went ahead and announced a fund. So those kinds of things. So you have to actually work with local governments, work with their own talent, and see what you can do. We also launched something called Sankalp Forum in India. Sankalp Forum, incidentally, is the first forum in India that actually was dedicated to startups. Uh, I mean, today people have forgotten that startup has become such a mainstream word that people don't realize that before 2010, probably nobody knew what a startup meant. So in 2009, we started Sankalp to actually build a vibrant ecosystem for startups. 1,500 people turn up from many countries of the world in India to actually participate in that. And Sankalp went to Indonesia, went to Bangladesh, went to East Africa. And today, Sankalp Africa is bigger than the global Sankalp we do in India. We have 1,500 people from 40 countries turn up in East Africa to actually celebrate entrepreneurship, meet young entrepreneurs, startup entrepreneurs, and take them forward. So we have been doing it, and this is actually the beauty of what Avishkar Group is doing. We are just not about money managers; we are also ecosystem creators, and we are also nurturing the future of those countries, future entrepreneurs of those countries, trying to see what and how to build the bridges between the mainstream and the impact ecosystem.
Absolutely, yeah. So good to learn that, and this aspect of these being challenging and newer markets are. It's also on the flip side an opportunity for someone like Avishkar to come in and lend a hand in building up that ecosystem and maybe get that early advantage in that ecosystem and fund some companies. And maybe I've heard that the ecosystems that are not mature, the few VCs that are there, they go and participate in multiple stages and multiple rounds of the companies that are working out, right, to make them work, right? That makes you end up with maybe 30-40% equity in a successful company. Is that a possibility there?
So, Prashant, let me correct you here that multi-stage investing is a very basic concept and it happens everywhere.
Right.
Now, if let's say you are a pure play venture capital fund, you make 50 investments, then let's say you assume only 10%, 20%, 30%. So in the first when you do the first culling, you may be left with, let's say, 60% companies.
Yeah.
Invariably you will participate in those guys
Yeah.
because you know this is like a pyramid approach. The guy who's actually continuously big, and then from 60 you will get down to 20, And
Absolutely.
so you will want to have more capital deployed in a company
Very true.
where you actually have success. Otherwise, you will be a disaster as a fund manager.
No,
So
that's
that's
totally
the
true. Yeah.
natural talent. Now,
Yeah.
because you are actually because you are actually in a very sparse environment and you are probably the only person and there is no
Right.
follow-on investor,
Right.
you will do the first round, you'll do the second round, you'll do the third round. You will disproportionately become the largest owner of the company. Now,
Exactly.
once you become a very large owner of the company, there are challenges and positives.
Okay.
Positives, you want to actually sell this company as a owner, you have the chance you can actually carry that out.
Right.
But because you are a large owner, tomorrow you do an IPO, you find it very difficult to exit yourself because you just hold too much stakes.
Exactly. Very
You
true.
will see a lot of those happen in India also because
Okay.
there will be control investors who come and take control. Most impact investors are not control investors, but by default, they may actually become control investors because there is nobody else coming and putting in the capital. And the promoters normally are first time entrepreneurs, they don't have the liquidity. So you have to keep putting in money and you cannot just illogically keep expanding the valuation.
Right, absolutely. And how do you think about portfolio construction while picking the startups? Are there any specific, like you said, I think you have three buckets at Avishkar. One is financial inclusion, one is healthcare, and then in agri-tech.
No,
So
so yeah, so I'll give you examples. So we basically are a financial inclusion, agriculture, and
right,
what we call essential services.
okay,
Essential services includes logistics, climate, water, health, education, anything.
okay, okay,
Now, generally, when we go to our LPs, we say not a single sector will be more than 40%. So you can do 40, 30, 20. You can do 40, 40, 20. You can do
okay,
40, 30, 30, 30. So you can, that
right,
flexibility we have.
right,
The other thing that we actually tell them is, which is actually what the investors are. So for example, my earlier funds, every company was zero revenue company. So we used to find an entrepreneur, give them money, take all the risk, build the company up.
right,
Now, India today is not the India of 2007, 8, or 10, or 2001. So there is no need for Avishkar to actually take risks. So now we actually say, okay, not more than 10% of our companies would actually be zero revenue companies. We'll still invest in a zero revenue company, but maybe one off. Has to
right,
be very compelling.
right,
Then we also tell them that most of our investments will be in stage A and B. So Series A, Series B investments, maybe sometimes Series C and D. Then we also tell them that we will take stakes between 10% to 25%, or 5% to 25%. Now, these are all indicative numbers. Huh? So it's not that necessarily we have to, if I say 5 to 25, then I can't do 26%. That's not true. We can do 35 also, we can do control deal also, but we will not do it as a normal business.
right, right,
So that's the statement we make, and we generally, when you do a portfolio construction, you look at every person that is working on your team, and you say, okay, so what kind of portfolio each one of you will build. So some may
right,
actually say, okay, I like financial inclusion, I'll build a financial inclusion portfolio. Then you ask yourself, how are you going to exit? So when we are a 10-year fund, you have 5-year investing, 5-year exit. Then you actually start saying, okay, so who all are going to make investment in the first year, that we start giving liquidity by the fifth and sixth year. So you make investments in the first year so that you have liquidity in the fifth and sixth year, so that you start returning the money. Then
right,
generally our inner inner house thumb rule is that by seventh year you should try to be 1x in terms of returning. Now, a lot of
okay,
venture capital funds will do, depending on a good season, you might actually do it in third year, fifth year also.
right,
But generally, for funds like us, we try to look at fifth to seventh year,
right,
creating an exit. So, exiting is actually critical and important for everybody, whether you are an impact investor or not.
very
Again,
true.
Avishkar is synonymous with impact investor, but we do not believe that we are just impact investor. We are a tech investor. We are also a deep tech investor. We are a climate
Right,
investor, and we do many other things. So,
totally.
so while we believe in impact and we screen for impact, so this
Right,
is one of the questions you probably wanted to ask me is, how do we evaluate a company? Well,
exactly.
when an entrepreneur comes to us, we ask them a question: Can you tell us how does your business delivers impact? And when I actually ask this question, most people struggle because they have not thought about it from that perspective. So we look at the business plan model and then try to actually help that company articulate its impact. And that articulation then gets converted into a screening memo. That screening memo is what comes to us as partners to take a decision whether this company meets the impact threshold for us to go forward. Once we have cleared that impact threshold presentation, then the company's job is to actually convince us that it is commercially logical. So we do not get into ever a conflict. So either a company crosses the threshold or doesn't cross the threshold.
Right.
There can never be a fence-sitting company that potentially will cross the threshold. We never will never invest in it. But once it has crossed the threshold, the
Right.
decision to invest is based on the financial rationale from a return perspective.
Right. So the first step of the evaluation is impact, and if it passes that, then it goes to the other metrics, right?
So therefore, a mainstream investor may do a impact investing, but it will be
Yeah.
very difficult for me to invest in a Mercedes Benz, for that matter.
Yeah, totally. And over the years of doing impact investing, have you noticed a common thread in the ones that succeed and maybe the ones that don't?
There are many different reasons, Prashant. A lot of impact entrepreneurs, are basically martyrs. They suffer from martyr syndrome. So, what is a martyr syndrome? You actually try to make sure that you have a problem. Solving it will actually take everything that you have, and chances are you will still not succeed. So, you can pick a problem that is unsolvable, very difficult, and then try to solve it, and you are bullheaded enough to not pivot. So this happens in mainstream also, it happens in impact investing as well. So a large number of entrepreneurs may pick a problem which is the most difficult one. Not very different from what I did. I mean, I was stupid enough. I was 29, but I have been able to pivot and figure my way out. So if you are smart enough and you can pivot your way out, realizing that there are different ways to solve the same problem, then you will. So I think being bullheaded about the problem and not thinking in pragmatic terms is one reason where mainstream companies also die, impact investing companies also die. The second big problem with impact investing is lack of definition of total addressable market, a term TAM that we use very colloquially amongst all investors.
Yes.
Impact investing, you can confuse yourself because of the total addressable market if you are selling a product to a very poor person. Now there comes the word, again a very colloquial word called wallet share. Now the poor has a very small wallet. So certain things, when you try to acquire poor as a customer, the cost of acquisition may be so expensive and the wallet share should be so small that you may not be able to build a sustainable business. That is very different in a rich customer case.
Right. Very true.
Because the wallet share is so large, even if you spend a significant amount of money in trying to acquire your customer, the wallet share will at some point of time make you profitable. So that specialization or that detailed understanding is not natural. It does not come to you instinctively. And that's another challenge. Other big issues with impact investors are pretty similar to the mainstream companies. People's understanding of governance, people understanding of benefit sharing, roles between investor and themselves, building a institution that goes beyond the entrepreneur. Those are the challenges that we classically face in mainstream and impact. They're all the same.
Absolutely. And the people, the founders who are solving these important problems, are they mostly coming from tier 2, tier 3 cities? Or do you see metros also being interested in solving impactful problems?
So, Prashant, you will find more impact investors coming out of Harvard, Wharton, and Stanford, and even some IIMs and IITs. Then they will be coming out of, for many reasons. The aspiration of a guy operating in, or a girl who are operating in given this thing, there will always be 5% people who are high performing. They have slightly deviant behavior, and I'll consider an impact or a social entrepreneur slightly deviant because conventional wisdom suggests everybody wants to make more money. But if you are high on IQ and high on EQ, which means you are in a very, and you actually understand the challenges of the world, then the best and the smartest should actually be solving the world's problem, not trying to make money. Making money, in my view, is a very lower order problem. And some people, 90% people are willing to compromise their IQ and EQ to basically keep their life comfortable, while others, 5 to 10%, want to behave deviate. So a large number of entrepreneurs actually come from the best of the best places. But then there
Right.
are other people who are actually able to observe problems from their context. So impact investing cannot be taken out of context. It has to be seen within its context. A large number of impact investing entrepreneurs actually emerge from their context. They can come from tier 2, tier 3, the tier 4 villages also, because they have a deep connection with the context. And because they have deep connection and they acquire skills. Now, a person from village can actually go to Harvard and then come back and solve their problem. Possible. Uh, so sometimes the Harvard guy is actually more, his EQ is higher or her EQ is higher because they have actually come from a certain context. So context plays a very important role, and a
Right.
large number of our people come because they are influenced by their context. They carry that context, acquire great skills and capability, and then come and manifest themselves as great successful entrepreneurs.
Absolutely, totally agree. And I'll just do the last main question before we go for the rapid fire round. And let's talk about the larger India story, right? How do you see India evolving in the next 10 years? And I know you're also on the IVCA panel sometimes, right? So, how can government also enable the startup ecosystem further, right, to make it even better place to build businesses here?
So I think Prashant, we have a prime minister who is considered by a lot of us as the startup prime minister. I think one of the idea that we are working on is called Startup Mahakumbh, which is actually in January is going to be a very large Mahakumbh. You will hear about it on April 18th, 19th, and 20th. We are expecting 2,000 entrepreneurs, thousands of investors of all sizes and shapes. A celebration of India's entrepreneur, a global showcase of India's startup talent to the world. Now, the fact that in 2024 you are doing something like this tells you that India has come a long way on the startup ecosystem. We are the third largest ecosystem in the world. We are also actually one of those that has actually a very thriving venture capital ecosystem. Our college students, both in the mainstream big metros and small places. Shark Tank is a big celebrity. Everybody wants to see Shark Tank, feels very connected. Uh, what I would like to see a lot more original ideas that solves India problem. Indian government has actually come up with more original ideas that have created value. For example, UPI, ONDC. These are great ideas that are inspired. These are entrepreneurial, not unicorns, but actually decacorns in making. And the valuation should be in hundreds of billions. These have come from the government stable. A lot of our success stories on the unicorn side have probably been, in some cases, have been aped from what we saw in success in the West. But I think newer and better ideas will emerge, which are locally driven. And I think India will see, given the kind of depth we have in the intellectual capability, both on the IQ and EQ side, I see a fairly significant evolution of Indian entrepreneurial talent. The challenge that I see both for the government and for some of us as investors is to convince the entrepreneur that governance of their company is actually a guardrail for their own protection, and it is not for the government or for a regulator or for investor. Uh, because we are talking about very young entrepreneurs coming from young background, freedom is their priority. So regulation is not their priority. Freedom is their priority.
Very true.
They are very passionate and they are very enthusiastic and they want to take big risks. Uh, I think I completely agree that young entrepreneurs are going to change the world. But young entrepreneurs need the wisdom of those people who come with gray hairs to successfully change the world. You may change the world for a short period of time because you are very enthusiastic and aggressive. But if you have to change it sustainably, then you would require the wisdom to come along. What are regulators, what are investors, and what is government is actually the wisdom that you need. And I think, therefore, young entrepreneur must see a creation of a board or governance guardrail as a protection for them from themselves. Because you make mistakes because you are too enthusiastic and you genuinely believe the guys with gray hairs actually do not have enough intelligence. As a young guy, I genuinely believed everybody is an idiot and I'm the smartest guy. So I actually completely empathize with the belief that young hold, that all the guys who are old are not really wise. But wisdom has been one of my successes actually come in because I surrounded myself with very bright, very exceptionally wise people like Praveen Gandhi, Arun Dias, Jayesh Parekh, Anant Nageshwaran. And these people played a very important role in my success. And so I genuinely believe the marriage of the thought process of the young and the naive to change the world with the wisdom and the experience of the others is the right combination. And governance is going to be the most important thing for India to shine in the world startup ecosystem.
Right, absolutely. That's great words of wisdom to end this with, right? For our young generation to accept regulation as well, that it's for their good, and work with that, right? All right, let's now do the rapid fire round, wherein I'll ask you five quick questions about the fund that you're investing out of, the venture capital fund, and you have to give five quick answers, right? So the first one is, what are the sectors and regions you invest in?
Across pan India, we invest across pan India. We're looking at climate tech, uh, education, health, financial services, agriculture, agri tech.
What's the typical stage of investment?
Generally, A, B, 3 million to $10 million check size.
Got it. Where can founders
I'll also
apply
give it
for?
in crores, 20 crores to 70 crores.
Sure, sure. Where can founders apply for funding in case there's a direct way?
Anybody goes to www.avishkar.in, you will actually see a place where you can apply and send your business plans. It comes to fund at avishkar.in.
Great. Last one, where can our listeners follow you?
I am on LinkedIn and Facebook. LinkedIn is actually easier. I'm also on Twitter, so you can follow me, Vineet Rai, Vineet Chandra. Vineet Rai is actually on LinkedIn, at Rai Vineet on Twitter, and Facebook Vineet Rai.
Great. I'll make sure to put all those links in the show notes below. Thanks so much for making time, Vineet, for doing this podcast with me. It's been an honor and pleasure to have you here. And I wish you happy investing.
Thank you so much. Thank you.